Hi, good afternoon. You're watching Closing Trades right here on 89. What a rip-roaring move by the markets. You could toil about and ponder about as to how good can it get from here. Well, I think the market itself has answered that. 25,000 back on the Nifty right now. And it looked like a very, very wobbly and shaky kind of start. But from there, it's really, charged up ahead. A good 400 points up in the green is where we're currently sitting at. 1.6% higher for the Nifty. What's leading today? Hero Motocorp up 6%, JSW Steel higher by 4.5%, Shriram up another 4%, Tata Motors up another 4%, Trent higher, Bajaj Auto higher. You can see that it's a lot of autos out there which are actually the leaders today. Other than that, there's also Maruti holding up well. And then, of course, there's heavyweight support like a Reliance, which is also holding up a solid 2.5% as we speak right now. There's ICICI Bank. Remember, for the last two trading sessions, we've not had banks actually perform in the market, but that clearly is, undoing itself. Even underperformers like Asian Paints are holding up 2%. ICICI Bank is higher by 2%. There's BEL, which has moved up another 2% in trade. Axis, iShares, L&T, all of it is participating. So yeah, can't really pinpoint and can't really have any complaints with this market. And look what the market breadth is like. 181 stocks standing to the gainers within the F&O basket with just 40 odd to the declines. And, it doesn't even make sense talking about the decliners when you have a Lodha up another 4.5%. HFCL is higher by 4%. And that's really the texture and the health of the broader end of the market. Let's welcome on board Sandeep Sabharwal and Kunal then to talk about which way the market is headed next. Kunal, did you anticipate in the morning that bulls are going to charge up ahead in the latter part like this?
No, not that kind of an anticipation in the morning, but I think in the mid-session somewhere, there was a very strong sign which was emerging. So just about, closer to noon is where we managed to strike off many of the large cap names showing signs of a major breakout and impending up move. There was a very good volume built up, OI built up into many of these names. And I think the biggest highlight for today was it's of course the weekly expiry for the Nifty, but the biggest highlight was on the options front on the index and specifically on the Nifty front, where there was a huge amount of short covering at the 24,800 mark, call option. I remember I think that option was around 60 rupees or 50-55 kind of a range. And the moment the option managed to break past about that 75-80, you saw massive short covering, which came back into the option writers. So I think that also triggered the move. Of course, I think the move is backed by solid large cap names, and you're not looking at just few large cap stocks. So Reliance, ICICI Bank, Axis Bank, Bajaj Finance, Trend, etc. Many of the stocks, wide variety of large cap names in the Nifty 50 basket, I think they are showing signs of strength. So it's more like where we left off, from on Monday for the markets. We're just trying to see a continuation after a couple of days of consolidation.
Oh, yeah, that we are. Sandeep, hi, afternoon. Did you anticipate that we'll make it back to 25K? Because start of this week, one was wondering that the going can't get better than this and maybe we hit a ceiling.
Also, the trend has been bullish only. I've been telling this for a long time now because the key in the market is always to evaluate the macros. So once you get the macros right, then I think stock wise you might do well, you might do better, and you might pick up some very hugely outperforming stocks or not so much like that. So that's just part of the entire investing journey. So I think what we need to realize is that in a scenario where inflation is coming down, interest rates are coming down, government spending is increasing, and there's likelihood of improvement in both consumer demand and private sector spending. Maybe not today, but going forward. And we cannot be excessively bearish in this market. So we have to use opportunities which the markets give on any sharp correction, any event-led correction, etc., to buy. Now, because I think what was happening at the border last week, some of the people bearish went further bearish, increased cash. Maybe people went short, and I think this kind of move can be explained, I think, largely by that many of those people might be either covering as the markets make a technical breakout or just buying now in FOMO.
I think, Sandeep, the bigger question everyone's toiling with, and this is just a learning that you've seen all through October last year up until Jan, and then when it got worse up until March end in the market, that is this the time to profit take, or do you just like ride the wave right now?
Yeah, directionally, I see things being fine, not only domestically, but even if, let's say, the global geopolitical tensions, tariff tensions seem to be moderating somewhat. Let's say, hypothetically, there's some deal between Russia and Ukraine, there's some truce between US and Iran. So I think the Syria deal could give confidence to the Iranians also that the US could do a deal with them. So I think there are a lot of factors which were negative earlier, which are turning positive, but people don't want to accept it. And that's the main issue. But that's fine. So I think people should remain negative, and that always helps the markets move up. So I don't like very sharp up moves like 1,000 point, 1,400 point, like 2 3 day moves. So I don't like those kind of moves, but that's the way market behaves. So I would think that people who are invested and are confident of the stocks they're invested in, they should remain invested. For people who are looking to invest and miss the sharp downturn in the which the markets provided, so now they need to stagger investments and buy.
Stagger investments and buy. That's the word coming in from Sandeep. But looking at individual stocks, and we've been talking about Reliance Industries, which has seen an uptick of about 18% so far this year. Sure enough, there have been other large caps which have outperformed Reliance also. Can Reliance move up further, taking the market higher with it? And what's actually led to this 18% uptick also? Sharad is here with some analysis.
Well, the big boy Reliance has joined the party. It might be late, but it is actually covering up. Of course, we saw rallies in the banking space and also in a lot of constituents of Nifty. And now the final rally is coming and is being fueled by Reliance as well. Fourth quarter was strong show with consumer-facing business of telecom and retail. And interestingly, if you look at Jio, there's expectation of further ARPU hikes in the year itself. The industry is expecting, and also in terms of value unlocking also, Jio's IPO is something which the street is watching out for. Two important things are also moving in tandem. The first one is that the succession plans is becoming more prominent. More senior appointments are coming in the boards, and also interestingly, the company is mulling stake sale in Asian Paints, which will aid the overall treasury income as well when it comes to Reliance. Now let's look at the calendar year returns, how Reliance and Nifty have actually played out. 2023, Reliance was just 11% against Nifty's 20 odd percent. 2024, it underperformed the markets in a bad way, almost 6% down. Nifty was up 9%, but this year is the year of return. Last 2 years underperformance being grossly overshadowed when it comes to the performance against Nifty. Reliance is up 17%. But there are two important things to know about the guidance ahead, what lies ahead. Of course, AGM is also coming in a couple of months. Two important things: renewable energy, right from incubation to operationalization. Now that means more cash flows will be generated, additions to the P&L will start coming in. And interestingly, Jio with a telecom layer is now expected to add a new layer. This is the AI layer. So that will be very futuristic, and of course that will also decide what the perception would be when it comes for Reliance. Now let's do an analyst take. What's the entire picture coming out to be? Almost 95% of the 38 analysts tracking the stock have a buy rating. The 12-month target price is at 1551. That means currently 9% return potential is left. But the lowest target price, 1293 coming from Ambit, while the highest, Mirai Assets, 1950 rupees.
Sandeep, typical of Reliance has been a slow starter. There have been many other large caps which have given much better returns and shown leadership. Do you think Reliance has further headroom from these 1450 odd levels?
I would think so, because the oil to chemicals business performance could have bottomed. We could see better performance coming from the retail operations. Telecom, in any case, is doing well. So, and Mr. Ambani, in his recent comments post results, also sounded very bullish on the new energy businesses, new ventures starting off and starting to generate revenue and cash flows. And the issue with Reliance always has been that you don't get free cash flows, and they continuously keep on investing in something or the other. Now, how much the stock can move up, in my view, will be determined by whether they reach some sort of peak investment cycle and start to moderate the investments and first try to generate cash flows from whatever they've already invested. So directionally, I think it will still do well and it will still rise because it's underperformed for nearly 5 years. But how much it can rise will be determined by all these actions, which we'll need to see over the next few quarters. Because we've seen this in company like Bharti, as the capex peaks and cash flow generation happens and debt starts to get paid off, the re-rating continues very rapidly. So whether that can happen in Reliance or not is something we need to see.
Reliance, in the last 3 months, it's been a 19.5% return that the stock has given. What's leading the charge today? Autos. They've seen some renewed vigor. Sandeep, what are you making of this charged up move and largely led by some of the two-wheeler names? Hero MotoCorp, I can see a Bajaj as well hold out very smartly.
So management commentary post results has been mixed, but I think there is an anticipation that normal monsoons, good wedding season, and finally, as we reach the festival season starting September, and this year it's a bit early also, that because of lower interest rates, maybe there'll be another rate cut prior to that. So lower interest rates, improved liquidity, lower inflation, more cash in the hands of investors will lead to a revival in consumer durable demand. So some companies seem to think that will happen. Many others are still skeptical because last 3-4 years they haven't done well. My view is that there will definitely be a decent revival, and as such, the entire consumer durable space, which also includes auto at the upper end, should do well this year.
So that's a take coming in on the auto space. Sandeep, I wanted to get your view actually coming in on the telecom space in particular, given the fact that while everyone's talking about you need to look at inward and you need to look at domestic oriented companies, telecom also makes a cut in that sort of a bracket, right? So in the telecom play, which one would you bet on? Would it be Bharti Airtel hands down, or would it be you'll give a look to to a Vodafone Idea, or for the matter of fact even Reliance because of the Geo, or the other companies?
Telecom play in India is just one company, which is Bharti Airtel. So Vodafone is never going to make money. And Reliance, we already discussed, like it's a combination of so many businesses that you cannot give a pure telecom kind of valuation or analysis to that. Although their telecom business will also do better as the entire space does well. So it's effectively Bharti, and Bharti, there is no reason for anyone who holds to sell, because incrementally, I think from here on, they'll still continue to repay a lot of debt and deleverage their balance sheet, which will lead to further improvement in their valuations.
Pick up on these spaces, and I'll come to Bharti in just a bit. But firstly, on two-wheelers, where is it that you actually see opportunity to put fresh money to work? And then the other one, which is Tata Motors, wherein you've got almost a conviction call that it's finally going to play catch up with the likes of an M&M, etc.
Yeah, so I'm very bullish on the two-wheeler pack, and especially Hero MotoCorp out of the two. Hero MotoCorp and Bajaj Auto, both of them, they've actually formed a classical base or a bottom formation. So we were looking at signs, volumes, indicators showing signs of strength. All of that has happened for both of these names. And I believe that from current levels, Hero MotoCorp is something which looks fairly attractive. In fact, even if you look at a mild retracement of its, say, 200 moving average for Hero MotoCorp, we are looking at potentially another at least 15% on the upside over the very short term for the stock. And if there is a much more bigger or a higher version of a mean reversion, then we could be looking at a substantial upside going forward for the stock. So it matters in terms of what time frame someone is looking out for. And then on Tata Motors, again, I believe that the stock has seen one of the worst phases. My sense is that from those 550 odd levels where we gave out a buy call for Tata Motors, I think the stock is showing signs of a classical turnaround. Wouldn't be surprised that the stock actually comes back to that 900 mark, say over the next maybe few months or over the next 1 or 2 quarters. Looking at the trajectory over the last 1 month, the intensity of the stock not to sell off post results and then come back again almost on an immediate next day. I think that itself indicates that the mood is shifted back to the buyers for Tata Motors. So would be bullish on the stock even at current levels, expecting the stock to move up to at least 850 to 900 further from current levels.
Right, that's the word coming in for Tata Motors. We also have Akshay Bhagwat joining us on the show. Good afternoon to you, Akshay. And looks like the markets have actually hit that consolidatory phase at this point in time, given the fact that we saw the sharp rally post positive developments coming in with regards to trade truce, with regards to the ceasefire as well. But now it looks like the markets are taking it a bit easy. Do you think the last 1 to 2 weeks of May is going to be the trend?
Good afternoon. Well, I think the rebound is pretty strong, and this especially comes after almost 10 odd days of trading around the pivotal levels of 24,350 for the Nifty index. So the rebound is going to be harder from here on, but I think if I were to compare the indices, I think now it has to be Bank Nifty, which once again gets into the limelight. It's been in a range for long, and looking at the overall price action and the individual weightage components of Bank Nifty, I think Bank Nifty should be again making it all the way for the all-time high levels and trying to surpass it.
Right. Okay, that's the take right now on the overall market. In the meantime, just looking at the texture of the winners, while sure enough it's autos and autos all the way that's propping up, some of the private banking names as well, which for the last 2 days had taken a little bit of a backseat, they also seem to be participating. So ICICI Bank, HDFC Bank, Axis, they're all holding up still right now. And L&T also higher by 1.6%. Sandeep, what did you make of the earnings and the commentary from L&T? Because this has been a slow mover again. Do you think we can still put fresh money to work and add positions to L&T?
Yeah, the L&T management sounded quite confident that they will be able to sustain order booking as well as growth. So I still believe it is undervalued relative to the size of the company, the kind of work they are doing, and the opportunities that exist for L&T. And their deleveraging efforts, etc., also have been underappreciated somewhat in the markets. So I would still be positive. So yeah, so we've been holding this stock and we continue to hold.
Right, so that's the word coming in for some of those counters. Let's take a look at some of the stocks that are actually reacting to their numbers at this point in time. You have CESC actually. That one is actually seeing a weak move in trade today on back of their earnings. If you look at CESC down about 2%, you saw about 7% drop in their profits. So on back of that, you have CESC that is under pressure in trade today. You also have GMDC, that's Gujarat Mineral Development, that is gaining on back of its Q4 earnings. Some of the other counters to watch out for, you have Zuari Agro, Sanofi India, Cochin Shipyard. That one is actually seeing a good move in trade today. They are awaiting for their earnings, and also you have the reports of partnership with HD Hyundai also. That is the reason why the stock is in motion today. Let me get your views actually on the narrative stocks of last year, Sandeep, given the fact that you had everyone talk about defense, you had everyone talk about power, you had everyone talk about PSUs. Now, once again, everybody's only talking about defense. What's your take now, and how should one position themselves, especially when you talk about these narrative stocks?
So one is the narrative, second is the reality. So I think the reality seems to be pretty strong on the defense names. So I would think that there are many. So I think the key always becomes that people always start looking at these companies when they start moving up or they have already been in a big frenzy. For example, I think companies like Bharat Electronics or Bharat Dynamics or many of the shipyard companies, HAL. So um, when they sold off rapidly, I think that was a time to accumulate. So I think directionally they will still do well. So now it won't be the entire PSU space. I think power sector, PSUs and related ancillary companies are not so bullish. But I think the defense names will still do well. Now it's a question of at what valuation, what price you want to buy. And it's always better to buy these companies when not after they have moved up 25, 30, 40% in 8, 10 days, but to wait for opportunities and when they correct, when the overall market is weak, etc., and then take some bets.
Those 1 week moves itself are so staggering. Many of the mid and small caps wouldn't have done that in about a year as well. Bharat Dynamics up 22%, Mazgaon up 9%, BEL has charged up 11%, and this is a large cap, by the way. HAL is up 7%, and these are just the 1 week returns on your screens right now. In the last 1 month, it's been even more staggering, and year to date, it's a 157% move on Mazgaon, and BEL being the large cap and the heavyweight that it is, it still moved up 48%. Kunal, but would you take a trading call on any of these defense names?
Yeah, I think even at current levels, so I think BEL, HAL, they would still look very attractive. HAL, in fact, is a much more better chart on the trading perspective. Then I think Mascot Dock as well as GRSE, Garden Reach. I think even these two names are looking fairly attractive. There's volumes which are chasing the price up move. There was a gap which was created for GRSE specifically, I think yesterday or day before. And after that gap, the stock had not filled, or rather had just very partially filled that or entered into that gap. And from there on, post that, we've seen the stock rallying up at least another 3-4% higher further. So that indicates that we're looking at a very strong support close to this gap for GRSE. So I think the entire space looks fairly attractive, and I would look to venture into these pockets as of now as well.
Talk about Piramal Pharma. While the numbers were impressive, the market is a little concerned about the commentary that the management did highlight. So let's hear out as to what Nandini Piramal, the chairperson at Piramal Pharma, said when asked about the FY26 outlook.
I think what we've said is it will be a muted revenue growth as well as EBITDA for the next year, but we do expect an increase in PAT, especially as we think that the geographical kind of alignment will happen. So we think that there will be better growth across each of the sites, so our tax rates should become closer to normal.
All right, so that's the management of Piramal Pharma addressing the concerns with regards to the outlook going ahead. Yes, the stock's under pressure, nevertheless, is down in excess of about 4.5% as we speak. When you talk about the market, near the day's highest point for the benchmark indices, 1.6% uptick coming in for Nifty. But let's get the closing trade picks coming in from Kunal as well as Akshay. Kunal, you go first. What's your closing trade pick?
So Reliance is something which I think after this breakout about the 1450 mark, I think would now start to look attractive. Expecting the stock to now move up to that 1480 to 1500 mark over the next couple of days.
Right, so that's Reliance Industries coming in from Kunal. What about you, Akshay?
I have two recommendations. As I said, I am pretty bullish on the banking pack, and my picks are from the private banking space. It's Kotak Bank, where I'm targeting 2147 and 2175. That's my second target. Stop loss will be 2060. And State Bank of India, where there is a good technical setup of an inverse head and shoulder bullish pattern. This breakout has been revisited. The stock is respecting the support and bouncing back strongly. We are looking at targets of 823 and 832 on this short-term trade in SBI. Stop loss will be 795.
Sandeep, where are you right now between the entire online food delivery platform business versus traditional QSR? And, while online food delivery now may be all about QCom and the kind of, valuations that are ascribed for that segment of the business, but pure play QSR, and I'm, taking just a leaf from Jubilant numbers, for instance. What does the future entail according to you?
QSR results have been mixed. So some companies have shown improvement, some companies still see muted growth, etc. I think it's been uneven, but I think that was expected in the March quarter because there was no recovery actually expected in the March quarter. But I think like I said, for consumer durables, as we move forward during this year, given that the base of the last 2-3 years is so bad, we will see many of these companies report much better numbers as we get into the second and third quarters of the current financial year. So I think, and these have been severe underperformers. So I would say that for contrarian investors, some of these companies could be decent bets.
All right, so that's the take coming in on Jubilant FoodWorks. While we are talking about that one, because you saw subdued demand overall, you saw intense competition also from other QSR peers, but Jubilant managed to actually deliver a robust Q4. Sneh is out here to tell us exactly how Jubilant FoodWorks sort of performed in the quarter gone by, and what is it that you need to watch out for the company when you go ahead. Snehi?
Well, yes, if you take a look at Jubilant's Q4 numbers and you compare them with Bloomberg estimates, then it's a beat coming in. Revenue has gone up by 33.6% on a year-on-year basis, coming in at 2,100 crores. Net profit has come in at 48 crores compared to 207 crores. Now, you have to remember that this time last year there was an exception item of 170 crores, an exception gain. So, if you don't account for that, then there's a growth in net profit coming in at 48 crores compared to 37 crores, an uptick of almost 30% on a year-on-year basis. EBITDA has also come in at roughly 389 crore rupees, up roughly 25%. EBITDA margins are slightly under pressure at 18.5% compared to 19.8%, down 130 bips on a year-on-year basis. This is one of the reasons the stock is under pressure today. And secondly, the operating profit is not trickling much into the bottom line. There's not been a big jump on the bottom line. That's also causing some pressure on the stock today. Total store network stands at 3,316, out of which Domino's share is 3,031 and 50 stores were added in Q4. Domino's like-for-like growth is 12.1%, delivery like-for-like growth almost 22%. Domino's India revenue is also up by 18.8%. In terms of management guidance, they've said that they will be adding 250 Domino's stores in India and 30 in Turkey. They also see margins going up by 200 bips very soon. And if you take a look at what brokerages are making of these numbers, Goldman Sachs has maintained neutral rating, hiked the target price from 700 to 730 now. Citi has maintained the buy, hiked the target price to 805 from 750 earlier, and Jubilant is their preferred pick in the QSR space. For Nuvama, they've maintained buy rating, hiked the target price to 838 from 776. Antique, on the other hand, maintains a hold rating but has also hiked the target price to 653 rupees from 564 earlier. So bullish calls from brokerages, they've hiked target price, but well, yes, that's a roundup on Jubilant's Q4 numbers.
By the way, I must add that the Western markets are not really looking all that great. It seems like India is one of those unique outperformers today, because even if I look at Asia, Hong Kong knocked off about almost 200 points. Shanghai as well was down about 0.6%. We're holding up a good 400 points up in the green. But even Europe has started off on a weak footing right now. Most of those markets are soft across the board. And the pre-market US rates, right now we're staring at a downtick of 180 points in the Nasdaq futures, down 0.6 for S&P and 166 points lower for the Dow as well. So clearly we seem to be the global outperformers, at least so far. Don't know how US markets are going to open or eventually close for that matter. But Sandeep, the one asset class I do want to talk about with you is gold, because from those peak near about 1 lakh levels, we've seen quite a consistent fall as geopolitical tensions are easing. Do you think that entire charm of actually catching the fag end of the rally and that it's going to only become dearer from here, that's sort of weaning away? And could we actually see a material downtick coming in?
So material downtick depends on what people assume to be material. But I think there's a great possibility that from the current levels of $31 to the ounce, we could see in USD terms gold correct back to 2800, 2850 kind of levels. So I think that's the kind of correction which could further happen. Now, gold as an asset class, because it has so much of embedded value, I think it will not go out of vogue now, especially in a scenario where longer term we could actually see a US dollar decline. But I think in the near term, because it's made a euphoric top, there was too much of leverage, bullish action, and too much of positivity. And like you rightly said, as a lot of the tensions are easing off, we could see gold also ease off.
Cool off coming in on gold. But Sandeep, always good to have you on the show and get in your thoughts on the markets and individual stocks. For now, we're going to take a very quick break.
Welcome back. You're watching Closing Trades right here on ET now. If you look at the markets around the day's highest point for the benchmark indices, we've seen a good recovery actually creep in for the benchmark after a volatile morning or volatile first half of the trading session. We now have Sunny Agarwal, who's the head of research fundamental desk at SBI Capital Securities, joining us this afternoon. Hi, Sunny. Good afternoon. Thank you so much for joining us on ET Now. And what do you make of the markets? Do you think that the next 2 weeks of May will be a week where the markets are going to take it a bit easy, try to consolidate and hover around those areas?
Yeah, good afternoon and thanks for having me on the show. What I feel is that market is preempting maybe aggressive rate cut by RBI. So we all know that RBI policy is in the first week of June. So maybe I believe that market is penciling a kind of 50 basis point rate cut by RBI. And if you look at the screen, most of the rate sensitives are participating in the rally. So, and at the same time, the uncertainty pertaining to domestic as well as global uncertainty has reduced significantly. So overall, it seems that the overall setup is constructive, and even in terms of rate cut trajectory, we believe that there is a great likelihood of further rate cut by RBI to the extent of 50 basis point in an upcoming meeting, backed by the robust earning growth by select few large cap companies. So if you look at ICICI Bank, HDFC Bank have reported a very good set of number. So I think again stock specific activity is something. Again, overall we continue to remain constructive, at least from an investment horizon, at least from an short term horizon, from at a broader level.
Okay, that's the take on the overall market. Bharti, of course, is one stock which has been going strong. There's Lupin. They've received a US FDA approval for one of their tablets. There's SBI Cards. It's introduced another Apollo SBI Card Select card. That is, there's Kalpataru. They've secured new orders worth about almost 2,372 crore rupees. That's Kalpataru Projects, of course. And then Cochin Shipyard, which came out with its numbers, revenue higher by 37%, PAT up 11%, EBITDA down and margins down, but stock still holding up 600 points. 6% as we speak right now, not 600 points, 1800 is where that stock is. Stand corrected there. Some of the other active movers, and Tata Power came out with its numbers. It's been a very choppy ride for the stock, still holding up 0.5% though, very volatile today. That's where it's finally settling around that 400 price point. NCC has been a strong one today, solid 1.5% higher. LIC Housing Finance, CESC, Muthoot Finance, these are some of the stocks wherein you are seeing fair amount of OI build up. In fact, since we're talking about Tata Power, it's been a mixed bag for them, no doubt. Sharad is here to highlight the numbers for us.
Well, it's a very important update coming in when it comes to the guidance. Of course, the numbers are largely mixed, and of course, the numbers, especially the Odisha Discom, they have done a superb numbers. Fourth quarter PAT has jumped almost 3 times on a year-on-year basis, and if you look at it, the manufacturing OPM of module manufacturing, that has also significantly gone up. Of course, the adjusted PAT numbers, if you look at it, is below the street estimates, and that's why we are giving a mixed set of a call coming when it comes to the numbers. But the guidance, that is very important, especially the Uttar Pradesh Discom privatization, that is something which will be bigger. And for FY26 capex guidance, they have increased it. Earlier it was 16,000 crore rupees for FY25, and now it is coming in at 25,000 crore. So the capex numbers have jumped up significantly, and there is no slowdown happening when it comes to the renewable energy product addition. Now, this statement is coming, of course, because the company itself have actually missed their FY25 renewable energy addition capex target. That was roughly 500 megawatt, and the guidance was 1.5 gigawatt guidance. So some spillovers would be happening, but what the street is watching out for would be the UP Discom privatization. That is something which will come in various schemes across a time period. So that is something which the street will be watching out for.
All right, thank you so much for that, Sharad, for talking about Tata Power. But sources have told ET Now that the government has finalized a new electricity draft amendment bill, and the Power Minister is all set to take it to the cabinet soon. Prakash is there with more details.
Yes, we're learning from our sources that the government has given final shape to the new draft electricity amendment bill. That's an important development coming in. We're given to understand that the Power Ministry has incorporated necessary changes to the bill based on observations made by the Parliamentary Standing Committee. We're given to understand that the public comments on the draft bill will be invited soon. It is important to note that the bill was referred to the Parliamentary Standing Committee in 2022, and since then, stakeholder consultations have been taking place, which have been completed now, and the Power Ministry is moving ahead with the new draft bill. sources are also indicating that the ministry will approach the cabinet after completing IMC process. And you are aware that the states had raised some concerns over several provisions of the bill that advocates entry of the private sector into power distribution sector. Discoms portability was also part of the proposal. Now, sources are indicating that the government is likely to revise certain provisions to gain state support, which is very crucial at this point of time. And this bill could play a significant role in the modernization of the power sector.
Okay, that's that all that we're gathering right now on the power space. In the meantime, just talking about some of the movers, and we were just, highlighting how strong NCC's move has been today. That stock holding up at those 230 odd levels. Kunal, I just want you to get on the charts. NCC, NBCC, the entire infra space has once again begun to do well. Where is it that you're scouting for opportunities?
Yeah, this could be a good turnaround because these stocks have actually underperformed. So NCC, for example, made a high just around the 325 or 350 odd mark in 2024. Post that, the recent low for the stock was around 170. So it's almost like a 50% correction for the stock. The 200 DMA for NCC is approximately 270 thereabouts, and the stock is at 225. So net, the stock is still 15% below its 200 moving average. And when you put this into context where the index is, where the large cap stocks are, this stock has definitely underperformed. NBCC, on the other hand, that stock is also looking fairly attractive. It's done a little bit much better. I think if I'm not wrong, the stock has already crossed the 200 DMA or about the 105 odd mark. So that's a stock which I would be bullish on. So my sense is that what's actually happening is now that with the confidence brewing into the markets, the sentiment become positive. There could be a play over here that the underperforming sectors like the infra, etc., capital goods, many of the stocks which have not performed, they could start to play a catch up for themselves. So you just have to maybe look out for those signs where volumes start to accumulate. Once that happens, I think you may probably be looking at a swift upside of say a 5 to 10% swing returns into these names.
Right, so that's the take on some of the infra names. Coming to you, Akshay, what's your take on some of the railway counters actually? Because most of them have actually reported their numbers. Right now, you have Aircon International that's also announced some order win. But on the whole, how are these railway plays looking to you, especially the ones that have actually seen a sharp run up and then correction as well?
Yes, so in the last few trading sessions, definitely the railway pack has seen a good recovery. So talking first of all about IRCTC, the recovery from 680, 700 zone is more of a pullback rally. But the best part is that the volumes in this rally have been pretty exceptional. So there's a clear-cut signal that possibly delivery is slowly entering into these counters at lower levels. So right now, as the setup goes for the IRCTC stock, this stock is most probably heading for upside of 825 to 840 from a short-term trading perspective. There is a moving average support at 745, below which you can keep your stop losses. And coming to Ircon International, clearly there is a range breakout which we saw in the prior trading session at the levels of 165. That just puts the stock on a strong momentum footing where 190 can be achievable in a very short time duration. So clearly railway packs are making a comeback. It's more of a momentum driven short-term trading pullback which you can look forward to.
Okay, that's the word coming in right now on some of these railway names. But Sunny, what is it that you're recommending to your clients right now? Where is it that you have your biggest overweights and underweights sectorally?
Yeah, so coming to sectors, right now we are overweight on selective names within banking, auto space, as well as oil and gas space. So case in point within banking, as discussed earlier, ICICI Bank, HDFC Bank, we feel have reported a very good set of number, and still there is an valuation comfort. On PSU side, we are recommending Indian Bank. We feel Indian Bank have reported relatively better set of number compared to its peers. So Indian Bank, we have got a price target of 650 around. So Indian Bank is one of our pick. Among the auto pack, we are riding on tractor segment through Mahindra and Mahindra. Again, a combination of a tractor as well as SUV play. So Mahindra and Mahindra is a clear leader over there. And among the smaller player within the auto space, Force Motors is something which we like. We believe that the company has been reporting very good set of volume number. So Force Motors is one of our top pick. And auto ends also we like. So few names such as smaller names like Lumax Auto, SJS Enterprises, Uno Minda, which is a more of a diversified play. And at the same time, if somebody is looking for an high risk, high return kind of bet, then Sona BLW, where we feel that in case the US auto sector is again back on track, then Sona BLW can be one of the play to ride on US auto growth stories. Within oil and gas space, we feel oil marketing companies are well placed, risk rewards are favorable. So HPCL is a top pick within an oil marketing companies. Cement and metal continue to remain a contra bet. So we have seen that a kind of underperformance by both these pack during the last 6 to 12 months. But again, we feel that over the period of next 2 quarters, the earnings will improve sequentially. So within cement pack, we like a mid-sized players like Birla Corp, which has recently reported a very good set of numbers. JK Lakshmi, again a north-based player, so JK Lakshmi is a top pick. And to cover a northeast based Star Cement is one of our picks. And within metal, we would like to ride with an non-ferrous pack. So companies like Nalco, we would like to bet our money on Nalco, where we feel that valuations are still comfortable and relatively aluminum prices are hovering in the band of $2,400 to $2,600 to the ton. Within the ferrous pack, we have seen a decent amount of recovery as far as the net sales realization is concerned. And we believe there one can ride that story through Tata Steel, which is a kind of leader in the steel space. So yeah, those are a few of our topics.
All right, those are some of the stocks and the sectors that you can watch out for actually very closely. Kunal, let me come to you and let's talk about what's happening in the textile space, because no doubt today Arvind is falling because they've said that they warned the margin pressure coming from the US tariffs. But on the charts, how are these textile names looking to you? Because we saw a lot of fervor in this one.
So I think Welspun was the only stock which was actually making a new high for itself. I think some time back, if I'm not wrong, just about a month back, the stock made a fresh high for itself. Post that, we didn't see any major kind of a follow through up move. Arvind, the stock has recovered from its lows, but it's still way off from its lifetime high levels of I think 450, 500 thereabouts for Arvind Mills. And then you have the other stocks, Vardhman Textile, etc. Even these stocks have been huge underperformers. Now, I would believe that maybe there could be a case that these stocks would eventually come back into a mean reversion phase and try and retrace at least 50% of the sell-off which these stocks have shown from the September highs, 2024 highs. So I believe eventually what could happen is now that these stocks may come back into a 15 to 20% kind of an upside. But then the timing of that is something which could matter, because if on best of the market days, if these stocks they generally remain into their own zones of consolidations or price corrections, the patience level gets tested for a short-term trader, because then he has to manage to hold on to those trades even in the tough and the worst part of the market. So I think that's the only catch with many of these underperforming sectors. The only one which I would be bullish on, if I have to take a call from the textile space, would be Welspun.
I think Page is the one which is spiking up today. If we can just bring up the intraday graph, the last time I checked, that's where you saw meaningful move. Most of these textile stocks have done nothing. There you go. It's shot up quite a fair bit. 560 is points up in the green, 1.25% higher. So big move coming in on Page today. Other than that, you've got the External Affairs Ministry briefing currently on Operation Sindoor. We will cut to it in just a bit. But it's the realty pack also which is holding out very, very smartly today. Sunny, how is it that you're viewing the prospects of realty? It's not really participated in the April to now move in the market. There have been many other sectors which have done well. But do you think it could play catch up now?
Yeah, so real estate, we have already seen a very good run up prior to this up move, and I think post consolidation now there is some still value left in few names like we feel Macrotech, Lodha Developers is something which we feel can continue to deliver a healthy set of growth. So we have seen a balance sheet deleveraging over there. But again, the stock has run up significantly, so maybe buy on dip is the right strategy as far as Macrotech is concerned. Brigade yesterday came out with a decent set of number where the pre-sales numbers are pretty strong, and at the same time launch pipeline continue to remain robust. So Brigade Enterprise is one stock which we like from a real estate pack. And in addition to that, Mumbai-based players such as Sunteck Realty, where we feel that post corrections now there is some value which is emerging over there. So Sunteck Realty is again one of our preferred pick within the real estate pack.
All right, so that's the take coming in on the realty pack. Let's take stock of what some of the counters are doing in trade today. No doubt you have Arvind that is reacting on that warning of margin pressure. You have Tube Investments on the other hand. They've come up with their Q4 numbers and there's a sharp drop in the profits on back of that. You have Tube Investments that's sulking in trade today, 4% downtick coming in for that one. Earlier I mentioned CESC as well, falling on back of lower quarterly profits. You also have the likes of Vascon Engineering, Zuari Agro, Sanofi, all of them reacting to their numbers. Also, your Berger Paints, because the numbers are better than the peers, is what the analysts have actually pointed out. And on back of that, let's take a look at what Berger Paints is doing. It's trading higher by approximately 3.5% or 3.8% right now, nudging to the 4% category. That brings me, Akshay, to my next question. How is the paint sector looking to you on the charts? And do you think, given the fact that there has been underperformance from this particular space for a while on back of the fact that there could be an increased competition, but on the charts, do you think now is the time, to go ahead and venture into them?
Well, see, if I were to look at stocks from the paint sector, there are mixed signals which I see. So right now, if one is keen on buying, it's Berger Paints because there is clearly momentum which is evident in the way the prices have been moving. So the stock has been largely range bound on the longer term monthly charts, and time and again, there is a bounce back which we see from 450, and this bounce back goes all the way till 625. So the current rally which has kicked off in the last 4 months, it's been more of a one-way rally. And the probability is high that this rally will somewhere kind to taper off near the levels of 625. So Berger Paints is the stock you can bet on. 625 is the possible upside. Asian Paints still has a negative broader price structure, so better to avoid Asian Paints as of now.
So give us your BTST strategies, anything that you would recommend?
Well, on the BTST, I'm still keen on the banking pack. And if one is keen on BTST, ICICI Bank can be looked at. 1450 is the current market price, almost near its all-time high levels. With a stop loss of 1437, you can look forward for targets of 1467, 1475.
Right. Kunal, how about your BTST ideas?
So again, large cap show. So I would go with a couple of large cap names. The first one is HDFC Life, and after quite some time, the stock is making a very strong comeback, breaking past about the previous major resistances about the 745 mark. So we look out for targets in the range of 800, stop us at 725. And Axis Bank is the other stock which I'll be betting on at current levels, especially given the fact that the stock has been a slight underperformer with respect to the peers, expecting the stock to play a very strong catch-up. Buy with a target of 1255, stop us at 1190.
All right, so those are the BTST ideas coming in from both of our experts. Sunny, what's your take coming in on the NBFC space in particular? How are you viewing this one now?
Yeah, so within NBFCs, what we feel is that on a relative basis, housing finance as a pack is looking relatively well placed. So LIC Housing is yet to report the number today, but we feel PNB Housing has already delivered a solid set of results. And in case there is an aggressive rate cut adopted by RBI, then we feel that housing finance can be one of the real estate can be one of the beneficiary, and indirect beneficiary will be housing finance. So PNB Housing is one of our preferred pick. Aditya Birla Capital yesterday reported a very solid set of number, and we believe that over the period of next 3 years, the loan book has potential to grow at 20-25% CAGR rate. So we feel the fair value of AB Capital is close to 280 rupees.
All right, so that's the take coming in on AB Capital and some of the NBFC's name. Kunal, on the charts, how is AB Capital looking to you right now? Because I believe that there were a lot of instances that this could actually break out of a range, and there was a breakout that was imminent in this one. Once again, do you think it is possible?
Yeah, very much possible. So that once upon a time is maybe likely to come back again for AB Capital because of the way the stock has recovered. So over the last 3 months, we've seen almost like a 50% recovery from 145 or 150 was the low for the stock, and 215 to 20 thereabouts is where the stock is trading right now. So it's a good jump of 70-75 points for the stock in the last 3 months. And then when we look at this in the context of the jump in terms of indicators, etc., this gives a sense that the stock is getting ready for a breakout of its lifetime high levels. So wouldn't be surprised that over the next 2 or 3 months we are looking at a potential 250 plus or maybe even 275 plus kind of a targets for AB Capital.
Okay, As that on AB Capital has been quite the buzzer, but still in the thick of earnings and at the fag leg, end leg rather, of the earnings season this time around. Margins will improve in the current financial year as the industry awaits for clarity on US drug price cuts. That's the word coming in from the top brass at Lupin. Let's hear out where they see the business headed through the fiscal.
We expect this base now to continue and hopefully high single-digit to double-digit growth in fiscal year 26 based on the existing portfolio as well as new product launches. We just launched Tolvaptan earlier this week. It's been a really strong launch for us.
There are, of course, as I said, a lot of the positive strokes that will actually contribute, but there are also negatives in terms of the forex rate, for example. It's been depreciating. The rupee has been appreciating a bit. So I would not venture to actually come out, but I'm very confident that the tempo would continue and our margins would increase in the next 2 to 3 years for sure, continuously.
All right, so that's the management of Lupin talking about the way forward for the company going ahead. But talking about the pharma space then, Sunny, how are you viewing this one, given the fact that there are a lot of conflicting news flows when you talk about tariff? One day you will have a tariff or sort of the call coming in to cut the prices of drugs in the United States. Then you also have that impending 90-day pause that is there, and most likely this time pharma also could come in the tariff regime. What's your take now? How should one view this sector?
Yeah, definitely. I think a lot of news flow as far as pharma is concerned. But again, if I take a longer term picture, so as widely discussed, CDMO as a space continue to look good. So we believe that the opportunity is phenomenal in terms of shift of market share from China to India. So overall, within the pharma space, CDMO continue to look good. And even on generic side, if you look at generic companies, their margins are not so significantly high. So even in case there is a price slash in the US market, I don't think so generic as an pack will get impacted. We would like to ride this sector through mid-sized companies which are likely to report healthy growth number. Case in point, Blue Jet Healthcare, again, that company reported a very good set of numbers. Yesterday stock is up to 10%. So maybe buy on dip is the right strategy as far as Blue Jet Healthcare is concerned. Cipla again reported a very decent set of numbers. So there we feel the risk reward is favorable as far as pharma is concerned. And again, one of the smaller player like Shilpa Medicare. And another one can ride the pharma sector through even medical devices as in place. So Polymedicure is another our preferred pick as far as the devices market is concerned.
So that's a slew of stocks that you can watch out for when you talk about the pharma space. Kunal, what stands out for you then in that space?
Not much, I would believe, for the pharma stocks. In fact, many of the stocks within the pack are actually going into a bit of a choppy move. We've seen Sun Pharma, for example, the stock has corrected 10%. Lupin, even after, I would say, numbers, etc. on the positive side, the stock has underperformed today. Cipla is the only one which is outperforming. Aurobindo Pharma has been a laggard as such. When you look at this in the comparison of what the stock has done in the last 1 year, I have a different bet altogether on the pharma pack, and I would believe that the sector could try and underperform largely. The nature of defensive, even that's not playing out for the pharma stocks, because erstwhile when you expect the markets to get into a zone of extreme volatility or choppiness or downtrend, pharma stocks usually become the hub where traders, they try and position themselves. But even that's not playing out for the pharma stocks. So that generally indicates that we're looking at a broad-based consolidation, something which could last for at least a couple of quarters for the pharma names.
All right, so that's the take coming in on pharma. On that note, thank you so much, Kunal, Sunny, as well as Akshay for joining us on the show. We have Snehi standing by to take us through the closing trades. Snehi, over to you.
Well, absolutely. Let's take a look at how today's trading session has panned out, and we have to sum up today's trading session in one word. It is going to be phenomenal. Considering today was the Nifty expiry, we knew we are heading into a day full of volatility, but who knew it's going to end like this? Because in the first half of the trading session, there is no way you could have imagined that Nifty was going to cross 25,000 mark, let alone the 25,100 mark that the Nifty managed to cross in today's trade. Slight drop from the day's highest point, but absolutely nothing to worry worry about because we are more than 500 to 550 points higher from the day's low on the Nifty 50, looking good, and 1.5% uptick over there. Sensex 2 in tandem. Nifty Bank also very sharp major recovery coming in from the red to a 1% uptick coming in on Nifty Bank. If you take a look at some of the gainers and losers in today's trade, Hero Motor big gainer from the Nifty pack, JSW Steel, Tata Motors, Trend, HCL Tech, Shriram Finance. I just want to very quickly see what IndusInd Bank is up to in today's trading session, because last when we saw IndusInd Bank was the only stock that was in the red in the Nifty 50 pack. So let's have IndusInd Bank, and well, yes, continues to be very nominally in the red, but other than that 49 stocks of the Nifty 50 in the green. Sectorally, you have Nifty Auto that's been the big gainer in today's trade, followed by Realty, Metal, Media, IT, Bank, Energy, Pharma, FMCG and PSU banks that have also made a very last minute recovery from the red to the green. So all sectors have ended in the green in today's trading session. Some stocks to talk about: Bharti Airtel launched fraud detection solution, a first in the world. Good move on that stock. Lupin received approval for its tablets from the US FDA, so good move on that front as well. Kalpataru Projects, big order win coming in for that company. That stock has done well. Cochin Shipyard was up and away in today's trading session, fell slightly after its numbers came out, but continues to be in the green. Once again, the recovery being seen over there, a 7.5% almost uptick coming in for Cochin Shipyard as well. Some stocks at all-time high: Coromandel International, ICICI Bank, JK Cement. Stellar moves coming in across all of these stocks in today's trade. Another thing, Cochin Shipyard, from the entire defense pack, you had BEL, Mascow Dock. All of these stocks were also up and away, and they have been for the last couple of trading sessions, and that momentum, that up move for the entire defense pack continues. So good moves coming over there as well. Other than that, KEC International, a top mover in today's trade. Triveni Turbine did well. We spoke with the management as well. Kajaria Ceramics, also a stock that has done very well in today's trading session. All of these stocks have inch gains of more than 7.5%. Broader markets also have held on nicely, but not as much as the benchmarks, because last couple of trading sessions, all the action has been coming in from the broader market. So that took a back foot today, ended in the green nonetheless, a 0.7% uptick coming in on both of those indices, Nifty mid cap and small cap. But well, yes, it's been the day of the Nifty. Sharp uptick coming in at all time at 2025 high level, pardon me. We crossed the 25,000 mark and we've settled slightly below that, but nonetheless looking good for the Nifty 50 today.